Let's get to the U.S. markets. Joining us this morning, Keith Springer, president of Springer Financial Advisors, and John Lonsky, Moody's chief financial market economist. Why are you laughing?
Just try to get a rise out of people.
Woo! Did you hear the joke about the ceiling?
No.
Didn't. Never mind. So, Lonsky, where are you on these FOMC meeting minutes?
Well, ultimately, the Fed is going to taper. It doesn't really matter much whether or not they announce it in September or at the end of October. I don't think so.
It doesn't matter. It seems to matter.
I think a 65% chance they're going to go ahead and announce tapering at the September 18th meeting, and the market has priced that in quite a bit thus far. But I wouldn't be surprised if, as the tapering approaches the announcement, we see the 10-year Treasury yield make a run for 3%, if not a little bit higher, which I think is not going to hold. I think that's a bit excessive, given the fact that this remains the limpest economic recovery since the Second World War.
Man, that's a word nobody likes. Do you think that the world is going to take over in terms of setting interest rates higher, regardless of what the Fed does?
I think that, yeah, a good chance that that's going to happen.
Will they lose control, or will it be in an orderly way?
I think early on they're going to perhaps overdo it on the upside, but we're eventually going to see an adverse reaction in the United States by the housing market, by the equity market and whatnot, and that's going to bring bond yields back down to a range that might prove.
So you mean initially the rates will overshoot, and it'll look like they're losing control, but then we'll come back to earth when
precisely.
When it's
but that's going to be a painful process. There's going to be more volatility. We're going to have wider credit spreads. You're going to have problems in the housing market.
Keith?
That leaves a lot of volatility. I don't think the Fed does taper. I think he was a shot across the bow a couple of months ago.
But he's long or something?
Well, I just think that the economy. Let's face it.
They're not going to taper in September or December?
I don't think so till the end of the year. I think they're going to be forced not to. I think it was a shot across the bow. He had to come across as being responsible. He doesn't want to be irresponsible as he's leaving. So he wants to say, hey, look, I'm about ready to do it. But he's also a student of the Depression, and he knows full well 1937. And he doesn't want to relive 1937. He's going to wait for, he's going to go the side of caution. I would imagine very strong economic numbers are going to force him to taper, and we're not going to get that. The economy's going to slow. The economy's going to continue to slow. We're seeing earnings already come down, right? Earnings expectations are starting to come down quite a bit. So I don't think he's going to have the room to do it. I think he wanted to say, hey, look, I'm in charge. I'm ready to do it if we need to.
So when then?
Well, it's not going to be for a couple of years. I really don't think so. I think the demographics push it out a number of years. I think individual investors need to be very, very careful because so many of them take so much risk. I mean, that's what we do for our clients every day. So many are just long rolling the dice, and they don't want to do that. And I don't think he tapers anytime soon. I think he wants to give the impression he will. In fact, I don't think they're going to do it. I don't think they can do it.
What in the economy do you see slowing, though? I mean, profits are coming down, definitely, but GDP is expected to continue going up. I mean, where exactly do you see the metrics not adding up to this?
GDP of 2 to 2.5%, 3%, I don't think is enough, because I think if you pull back the stimulus, you go back to 1% or below. And the big thing for me is deflation. I think they're scared to death of deflation. I think they really, really want that 2% inflation rate. We barely saw it with consumer prices a couple of weeks ago, and I think they're scared to death of a Japanese-style deflation situation. I think they're really afraid of pulling it back because it's not so much the slowdown in the economy. It's the lack of inflation or negative inflation or really deflation is what scares them the most. And I think that's the real reason they don't take the right.
John, you were saying it doesn't really matter. Have you been watching the rupee? She is my rupee person. It was an all-time low yesterday, right? The rupee.
Early trading.
You've got, India is apparently thousands of miles away, right? And you've got these emerging markets that are moving on the prospect of a possible taper at some point in the future. How can you say it doesn't matter whether it's September or December when the entire world seems to be
Well, eventually tapering has to come to an end.
Were you surprised that we're seeing all this flux in the emerging markets based on what Bernanke
said? I am, and I think that's overdone. It's an exaggerated response to an end to tapering. I don't know why they're so fearful that this is about to come to an end.
And if anything, here's
what we got from, at one point, when quantitative easing was in full flux, we were looking at a junk bond yield of less than 5%. And if that's not speculative behavior, then what is? So perhaps it's not a bad idea to try to bring quantitative easing to an end, to tell financial markets you're going to have to go out on your own. You're not going to have the crutch of monetary policy any longer. And I think that will help to reduce the risk of financial asset price inflation that I think worries the Fed right now much more than consumer price inflation.
So should everyone get out of bonds then, if bond funds are going nowhere but down?
Well, I think they're going to have a ride. They're going to have a roller coaster ride. I think the yields are going to go higher, then they're going to come down. You have to have a strong stomach right now to be in bonds.
I think that's an analyst approach versus someone who's on the street every day. I mean, with all due respect, an analyst approach definitely. We've got to start to look responsible. And yeah, is it the right thing to do? Absolutely. We've got to start to taper, no question about it. But the reaction on the street, the reaction of the investors, 'cause I have to deal with individual investors every day, is going to be fear. They want to see that the Fed is going to continue to pump money in, and if there is a fear that they're going to stop, I mean, I think if he tapers by a large amount, the market comes down. A lot of it's built in. Bond yields, it's a pendulum. Bond yields are going to bounce around. Bond yields are going to go much higher because of this fear. But is the difference between an analyst versus how the investor feels?
Lonsky, you don't think that there's been irreversible damage done by all this QE at this point?
At this point in time, no.
Okay.
I think consumer price inflation is well contained, and we really didn't have all financial asset price inflation.
We can get out.
Pardon me?
We can get out cleanly without.
Yeah, I think as long as we try to exit slowly. Okay.
I hope so.
don't think we're going to see inflation take off anytime.
When you see the rupee and stuff like that, you wonder whether.
And what else bothers me is when you're having these problems in India and some difficulties in China. At the same time, the past month, I believe industrial metals prices are up by 9%. That's kind of scary. Why are we getting base metals price inflation at the same time that we find emerging market countries struggling?
Those are bounces, though.
I hope it's just a bounce.
Thank you, gentlemen. See you later.
Thank you. It's great to be here.